Good afternoon, everybody. Welcome, fellow panelists. It's a pleasure to have you all here. And we've prepared, hopefully, an interesting and inspiring conversation about a topic I think that is on the mind of so many people these days, which is how do you actually get money to fund your international scaling plans? To that point, I want to first introduce each of our panelists briefly. Start ladies first. Agata Nowicka. Agata is an investor at Lounge Partners Group, an emerging growth stage fund focusing on businesses that leverage data. Lounge invests from Series A to pre-IPO, both in Europe and Asia. And Agata is also founder of Female Foundry, a community of over 5,000 VC investors, entrepreneurs, and angel investors that support women founders. Welcome, Agata.
Thank you. It's great to be here.
All right. All right. To my left, Antoine Praderol. Antoine is a Chief Investment Officer at Green Angel Syndicate, as we just heard, a UK-based angel network that invests in startups tackling climate innovation. The syndicate has, I guess, 350 members and has made 35 plus investments. And Antoine actually has built a personal portfolio of about 25 angel investments and actively supports founders as a mentor in the Imperial Venture Mentoring Service. So welcome, Antoine. Thank you for joining us. And finally, Jan Riepel. Jan is regional manager at the Vienna Business Agency, the investment promotion agency for the city of Vienna. And the Vienna Business Agency provides both financial and non-financial support to encourage international companies to set up business in Austria's capital city. Jan oversees the agency's efforts in a number of countries, including Germany, UK, Ireland, the Netherlands, Sweden, Norway, and Finland. Thank you very much, Jan, for joining us.
Thank you very much for having me.
So, since we're talking about investment and fundraising, I thought let's tackle the elephant in the room, which is it's a really horrible environment for fundraising these days. I actually did a bit of research. There's something called the State of the Market Report that's put together by Silicon Valley Bank, and it was published recently, where it plots basically the amount of money that's been invested on a quarterly basis in early stage businesses, as well as the average valuations, pre-money valuations. And actually, when you see the chart, it's quite shocking. Just to give you 2 points of reference, when comparing Q4 of 2021 to Q4 of 2022, the median pre-money valuations have dropped 50%, okay, during that period, back to what they were kind of pre-COVID. And the capital invested per quarter has dropped a staggering 75%. From that quarter to quarter comparison. So basically there's less money and they're paying less for bigger stakes in companies. So not exactly a fantastic environment for companies that are looking to raise money. Having said that, it does raise the question, how has that general broader macroeconomic climate impacted your approach to investing? Maybe let's start with Antoine.
Sure. Well, so definitely we have seen, that the market has cooled down. I mean, there is no doubt about that. But what I would say, and that's what I showed in my presentation earlier, I think in our particular space, which is climate-related investments, we have not seen a significant cooling down. I mean, it's becoming more and more mainstream sector. There are more and more companies. There is more and more money. In particular, in Europe and the UK, I think it has continued to be quite active. Mm-hmm. What I would say is that it takes more time for the companies to raise. So we have seen, these rounds take longer. And the valuations have maybe, I don't know if they have come down massively, but they are probably less higher than they used to be at some
Right, well, I guess
point.
there's less money chasing fewer deals, right?
Yeah,
So
yes. But is that necessarily bad? I don't think obviously it's not bad for investors, but
it depends on which side of the table you're sitting
even
on,
for
right?
companies, I think I think having a realistic expectation is, I think, the best way of building long-lasting success. I mean, that's the way I would phrase it.
Agata is kind of representing the VC community. What's your view of this?
So obviously it depends on whether I'm talking about Female Foundry or Lounge Partners. In the Lounge Partners part, we've definitely seen an pickup in terms of deal flow. And I'm talking about either companies that are looking for bridge rounds, so those companies that are running out of cash, or those companies that are willing to very quickly extend their runway based on the slow fundraising conditions. almost chasing, kind of trying to buy themselves time to reach those valuations you've just mentioned. But that basically doesn't necessarily mean a higher quality deal flow. So definitely there's that much work that we need to put into going through these opportunities. We focus on data, so therefore in parallel as well there's been a pickup of deal flow coming out of AI and obviously ChatGPT, which as well is another bubble. So right now we are a little bit of an overwhelmed state when it comes to potential investments. I'm not sure if you want me to talk about due diligence, because that's also changed.
How has that changed?
As a consequence of that huge inflow and the very slow fundraising conditions, but also even though we keep our mindset quite positive, we believe that that kind of stagnation is not going to change until the end of this year. And therefore, we are paying much more attention when it comes to studying levers that are going to be fueling the growth for the companies and therefore translating into...
So is it fair to say that there is basically now much more detailed assessment of investment opportunities than it was before?
Yes, and I think that refers to maybe what, Antoine, you've mentioned. Deals are taking much longer, I would say about 30-40% longer.
Well, I guess that goes hand in hand with competition, right? If there's many investors going after a single deal, then there's probably a willingness to overlook certain things, or you know, there's a natural inclination to push forward to win the deal, right? So you're probably not as careful. Yeah, and obviously you're representing a city government, not necessarily a traditional investor in that sense. How has the general climate impacted your approach to the whole process?
So well, I bring in here the kind of governmental side of things. So when I'm speaking here about funding, it's mainly grants, so non-repayable money being paid for specific projects companies can apply for. And of course, we have seen no drop of money put into this basket. It's even increasing, let's put it this way. So we try to cover up maybe some losses, but of course we can't reach such a level as a VC can invest here. But yeah, applications have been going up over the last couple of years for this kind of governmental grants. And we see it as an addition to VC capital that is coming in, of course. But no, there is no, so from a governmental side,
there's no
business
change.
as usual. Yeah,
Even though not turned off the faucets, so to speak.
Yeah, precisely.
Okay.
Yeah.
Let me ask you, Antoine, because I got to mention something along the lines of getting a lot more demand for bridge rounds. Also talked about the need maybe to extend runway. What are you suggesting to your portfolio of companies? Should they try to extend their runway to overcome this hopefully short-term setback? Or should they look for alternative sources of funding like bridge rounds to bridge that gap? What is your recommendation?
Well, I think it's both. So, you know, they definitely need to, I mean, we tell them that they probably need to raise a runway of maybe 18 months or 24 months. And probably 2 years ago, maybe we'd have said 12 months. So we are definitely trying to prepare them for a longer, you know, runway. So that's essential. You know, that's the right way of going through this phase. But then also we see companies, you know, coming for bridge rounds because they need it. So in that case, you know, we have portfolio companies. We're here to support them. When we believe in them, we support them as much as we can. And we introduce them to other investors and make sure that, you know, they can get what they need.
So interesting alternative perspective. So I didn't properly introduce myself. So I work as a startup mentor. I work with business-to-business tech startups and founders to help them sell and market to enterprise customers. And one of my clients is a UK-based company in the AI space. And I was chatting with the founder a few weeks ago during one of our sessions, and it was interesting, his perspective. He said that he was getting a lot of pushback from his board to hold back on spending and to maintain a longer runway. But what he's found is that since this ChatGPT insanity was introduced in January, the demand and the inflow of investors to his business, which is an AI business, has skyrocketed. So he's actually finding that He's very aggressive in the way he wants to gain market share, and he's saying, look, now's the time to beat the drums, and he's raising money now. But it's really interesting how sometimes these almost, I would say, random developments can change an entire industry's perception about an opportunity.
Yeah.
So we have three types of investors on the stage. An angel investor or angel investor syndicate, a VC, and a government source of funding. Can you each kind of present your case for the benefits of working with you as an investor, and if you're prepared to explain those as well, potential drawbacks or things to keep in mind when doing business with your type of investor? Let's start with Agata as a VC.
Sure. So VC is probably sits somewhere in the middle, or at least is a follow-on. Typically, is a follow-on investment category after angel investment, unless you're such a great syndicate as Antoine's that participates at Series A and onwards. So obviously, the benefits of raising capital, venture capital investor are such that you are put on the trajectory of high growth, which means you are probably, if you do your deal very well, meaning you're going to pick the right investor, you're going to have the support mechanism around you to support that growth all the way through these exits, if you're lucky. What comes with it, this is why I want to put a little bit of caveat already, is that not every business is supposed or has got a profile to raise venture capital, because the expectations of venture capitalists are very high. We are talking about the exit horizon of about 7-8 years post-investment, because we know that it's going to be delayed, but let's say 7-year, 8-year exit. And therefore that puts you in a kind of trajectory of growth that many of the founders cannot keep up with. So that's one thing to keep in mind. Obviously, venture capital is probably, I will use that word, sexy category. So obviously there's a publicity and kind of profile that comes with it that might help you to attract different types of capital more easily, such as debt financing that we haven't really touched upon yet. But again, it comes with additional control. You wanted to say something, Zoltan?
I guess I just wanted to highlight
yeah.
that it's you get the fuel for growth, but it comes at the cost of expectation of growth, right?
Exactly. And also there's certain kind of control that maybe with government funding is not there. There's a certain level of, especially when you go beyond Series B stage, or actually already at Series A stage, of quite specific reporting requirements and board seat requirement as well, which again doesn't really fit everyone. So yes, apart from that, I would say I would still promote obviously venture capital. It's still a very competitive category, especially these days. So again, managing the time expectations and the growth expectations probably is the first step, I would say, to assess it as a potential capital category.
Okay. Jan, tell us about what the benefits are of getting funding from an organization like yours.
Yeah. Well, first of all, as I said before, it can be an addition to of course, much more money than that can be provided.
What sort of tickets do you invest?
For example, we have a funding program, a grant, where you can get up to 200K for expanding internationally.
Okay.
So this is something you can get on top.
And you actually don't invest, you provide grants.
Precisely, this is one of the great pros. So you get the money, it's non-refundable, and we do not take share in actually what you're doing. This is, of course, the kind of drawback here, because we do not provide this kind of guidance you can get through a VC. So you come with a project, it goes through an independent jury, it is seen as a good thing, a good plan you have there in place, and then you will get the money granted. And that's it. And then, of course, you have to keep track of invoices and stuff like this and using the money according to the project you have handed in. The benefits are, of course, non-repayable, and there might be some other services coming along as well. So non-monetary, as you have mentioned before. we're doing trade missions. We have a network with other cities. We are calling ourselves an investment promotion agency, but we know all the other investment promotion agencies in Europe. So if you would like to go to Berlin, we can put you in touch with the guys there in Berlin. They can tell you about the local funding there, and so on. And the times have shifted. So a couple of years ago, IPAs, they were each other's enemies. So no, you have to come to Berlin and not go into Austria and so on. But nowadays we're working hand in hand and working together because you're expanding in one country and then to the next one and so on. So supporting the European network here. There are trade commissioners based everywhere, so those are the kind of benefits you have going through the for governmental grant.
So there are two considerations that I've heard that could be sometimes drawbacks to getting funding from, basically grants from government organizations. One is that sometimes market-driven investors frown upon companies that are taking handouts, because that's how they perceive it from government organizations, and it doesn't necessarily show that they're market-focused, but they're just kind of getting the money. I'd love to hear your response to that. The second is, oftentimes you get funding for a grant for a particular type of project or development, and the circumstances change because that's how life works, right? You're building a business, you realize you're not going in left, but you're going right, but you still have to produce that product for going right because that's what you got the money for.
Yeah.
So how do you answer those objections?
Well, yeah, they're in place. So if you hand in a project and it's being validated and granted, and of course you have to use the money according to what you actually have applied for.
So no, company parties in Bali or anything like that?
No. If you show up next time in a Ferrari, you'd have had it before.
No expensive DJs, nothing like that?
Well, the DJs I think is all right, depending on the kind of program you have. But so the bureaucracy, of course, is there. And at the end of the project, there is an assessment, and you have to keep all the invoices, and you have to justify how you have used the money correctly.
Right.
And of course, this is it's taxpayers' money.
So it's just a fact of life. It's part of what the strings, so to speak, that come attached with this business.
Yeah.
Okay.
Yeah.
Let's talk about the benefits and potential drawbacks of angel investment.
Sure. I mean, the first thing I would say is, companies that we see and which get government money, or we like that. What's the problem with that?
I've heard some U.S. investors, and I've heard U.S. VCs sometimes frown upon that. I mean, that's a very European thing. In the U.S., you don't really get government grants.
Okay. Yeah. Okay. Well, we are European, I guess. Yeah. So in terms of Green Angel Ventures or Green Angel Syndicate, we are a specific beast, I would say, because we are a specialist angel network. So we are just not like an individual angel at all, and we are specialists in what we do. But at the same time, we are composed, of angels. So there are groups of angels. So I think we get, in some ways, you get the best of both worlds. So by that I mean you have individual angels which end up on your cap table, and these people, in our case, very, very often are specialists of the areas that the company operates in, and therefore they are very happy and very able to help the company, get clients or get partners or find investors, etc. There is a lot of individual value added from these angels.
So-called smart money.
Well, I would call that helpful money. So people want to help. Even though actually there might be small checks for the company, so the company gets £10,000 from that particular person. For that particular person, £10,000 is a lot of money, maybe. So he or she is going to be very motivated in helping the companies, in a way which is completely disproportionate with the amount of money that you have received. So sometimes it can be very, very helpful. And because our members are specialists, I think they do a very, very good job at helping the companies. And on the other hand, because we are a big network, we've got more than 300 members, but also we've got our fund, and we've got money from British Business Investment, which is also co-investing with us. So we are able to put together more than £500,000, up to $1 million or $1.5 million sometimes. So significant tickets, which can fund the companies for a while. And so that helps the companies, I think, in a great way, because it's big enough. And so the drawback sometimes is that it takes time to secure that check. But once you've got it, it's big, and you get the help with it.
Got it. We're here to talk about international scaling, right? That's the fundamental focus of this panel. And so I want to get to that in a little bit more detail. Where do you think that you as investors can add value to companies who want to break out of their home markets or to increase their international footprint? Who wants to? Agatha, do you have a
Okay. Yes, I'll go. So I think it's about basically, first of all, it's about laying out what founders typically need when it comes to international expansion. And in my opinion, what is definitely needed is the knowledge of a local market. What I mean by that, and basically how we not always happens, but basically how we try to support our companies is through our identifying even opportunities, even on that level, is by really making sure that we can add value in that particular market. And equally, if there are any entrepreneurs in this audience today, I would encourage you to really do that due diligence on investors. I know that it is difficult right now to go with that extra steps to be searching smart money. But basically, I would be definitely either looking whether an investor has got a local office in the jurisdiction where you want to expand into, or at least has got at least one portfolio company in that jurisdiction. Because that investor, therefore, will be able to not only help you to maybe even help you with some regulatory issues that are specific to that local market, but also help you to probably understand better the mindsets of the local users and people that you will want to hire. And thirdly, obviously, because we keep talking about capital, so I'll stop on that point, is to find you follow-on investors, again, that has got specialist networks actually within that local market. So we always are looking for ways. Obviously, we never know, especially at the seed stage or Series A stage, not all the companies have got a very drawn-out plans where it comes to that international expansion, but definitely we are value-driven investors, so we would definitely want to leverage as much as possible our local networks.
Got it.
Yeah.
Jan, what's your view? I mean, you mentioned this connection to other business agencies.
Precisely.
Right.
Yeah.
That's one. Anything else that comes to mind?
Well, first of all, of course, we're always happy when Viennese companies expand globally. This is great. You know, it's a small market, Austria again, and so we have to reach out. And yes, this international connections we have is really important because most agencies like ours, they provide soft landing programs. You know, come to Berlin for a week, or you know, come to Vienna for a month. We pay for flights, accommodation, stuff like this. So this really helps. And just, you know, dipping into a new market, go there for a week, go there for 2 weeks, whatever. You know, there's a huge conference, there's something built around it. Go there. There are no strings attached.
Yeah, it's a good place to start gathering information and insights.
Precisely. Yeah. It will cost you just the time of being there. And most agencies are really forthcoming. So they welcome you there. They introduce you to the network. They will also introduce you to local funding opportunities. So we are really happy to bring in VCs and so on. So even on our website, you know, we have listed a lot of different funding opportunities. So we are really happy in sharing our knowledge.
Okay. So in a moment, I'll ask the audience to pose any questions they have in their mind. So please start thinking about that. To Jan's point about the kind of soft landing and to opening, you know, doors locally, is there anything else do you think that investors can do on a more strategic level to support a company's international scaling?
Well, I mean, in our case, I think it comes back to who we are. So we are a group of people, and I think the angels. And so I think what we can do is create the connections between the companies and the angels. And in many cases, some of these angels might have good connections, know the market, or know the way the particular sector is organized in that particular market. So we have this group of angels. We've got through them. We also have connections with corporates. So because many of them have been working or are working in these big corporates, and so they can open doors or they can help in one way or the other. And obviously, introducing to other, we know our limits, so introducing to local investors, or we've got a network of investors in many different places. So that's the ways we can help
So it's
from
really
London, even though we are
building connections through that network of individuals, through the companies, to other.
Yeah, and the last point I would say is, because now we've got a portfolio of 35 companies, some of them have already gone to these different places. So we can also create connections between the portfolio companies so that they teach each other.
Got it. Okay, great. Any questions from the audience? Anything that's on your mind? Yeah? Actually, do we have an extra microphone for the lady, or maybe you just... Yeah, okay. Hopefully we'll hear you.
Antoine, perhaps for you. If you were the new UK Prime Minister...
Just for instance.
No pressure.
Accidents happen.
I'm British. I'm British, so I could.
Yeah, of course, being in the UK. So if you were the next UK Prime Minister, what would be your next biggest incentive for startups?
Well, I think it's very much about, as I think I said in one of my points in the presentation before, it's very much about making sure that the markets are accessible, to new technologies, etc. So, reducing the barriers to entries for startups. I mean, one sector which I know particularly well because I've invested in several startups in that, is the built environment.
Sorry, the which environment?
The built environment, so buildings and increasing energy efficiency in buildings. This is a sector where the government could have a very big impact, I guess. Forcing people to upgrade, their buildings in one way or the other, or their houses. Obviously, it's hard to do, and it's not always easy politically. But I'm sure more can be done than what has been done in the past 10 years. I mean, so that's one area. So, and I think in many sectors, unlocking opportunities for companies which have innovative solutions is really what the government can do. So I could do a long list, but I would start with the housing sector and the building sector, which is particularly inefficient in this country, I think. And
that would be, say, if you were to design the next startup, if you were to design the next startup in the UK, that would be focused in that particular industry.
Well, it's a very broad industry, so I'm not sure, but I'm sure there are lots of potential opportunities in there. But that's definitely a very big one that I think is very interesting. Yeah, I mean, moving from, today, very inefficient stock of buildings which are whole, heated with gas boilers, to much more efficient, and zero carbon buildings is a huge opportunity. And it's not only good for startups, it's good for all the people who are going to work, to upgrade the buildings. It's such a massive job creation opportunity, I think. So.
Thank you.
Great, thank you. Anybody else want to be UK Prime Minister for a day? Okay. Any other questions from the audience? No? Okay. So, I'm a founder. I've built a strong presence in, let's say, my home market. I'm close to or have product market fit. I feel like I've got the resources to devote to international expansion. What are the top three things that I should keep in mind, focus on, consider as I look to expand into an international market? What would you say?
I have one.
Okay, we'll start with one.
Which is to really understand local customer and local talent. Because without these two, you might not be able to succeed. I will be putting investors actually in the third or fourth actually category, because if you're able to demonstrate that product market fits, because that product market fit, even though has been demonstrated this Series A, it's still the expectation is about metrics that demonstrate that product market is throughout your innovation and obviously growth. So understanding these intricacies or these details, behaviors and dynamics of the local market would be my priority, and therefore finding the right talents, or maybe even completely changing your talent strategy that you have in the previous in the existing just to actually accommodate that market. So really thinking creatively and really thinking ahead of the time and leveraging local knowledge to get to the answers, as opposed to trying to imagine what that local market might look like.
Okay, so local market understanding, hiring local talent. Anybody else want to add to that list?
Local understanding would have been on my mind straight away. You know, I'm dealing with a lot of international companies coming to Vienna, and of course our main trading partner is Germany. So most of the companies are coming from Germany, and you would assume, you know, sharing the same language kind of would make things easier. But cultural-wise, it's a huge difference. The approach to business. Austria is a bit more relationship-based. So you know, you go for a coffee first, you go for a lunch first, and then you talk about business. And this has to be understood. And I'm working with UK companies as well. You know, they're used to fast selling. And you know, we have a good product, we have a good service. You know, everybody
Buy it
else,
already.
yeah, precisely. Yeah, everybody else is buying it. You know, you have already expanded to the US, everywhere, and then they come to Austria, and why is nobody buying our product? You know, it's proven internationally. But then, take your time. You know, build up the relationship, and it takes time. But then, when you're a trusted partner, they will stick with you for a really, really long time, even though there might be competition coming in, being cheaper, whatever. No, but they know you. And this is true for so many different markets. They all have their specific nerdiness.
Got it. Okay. Anybody else want to add to that list of things to focus on?
I would say prioritize the countries. You know, I've seen some companies which are willing to expand in different countries at the same time. That usually doesn't work.
Yep.
So, you know, do your research, get local contacts, understand why you want to go to this country rather than this one, and then once you've got one country, you know, focus on this one really hard, because if you're trying to spread your limited resources too broadly, that often doesn't work. If you want to go to different places at the same time, you can do it through distribution or, you know, other ways, but if you want to go yourself, you know, be very clear on one particular priority.
So I actually did a workshop earlier today about international growth and expansion, and one of the typical situations I explained is that, you know, I want to build a global business, and then they start dreaming about Asia and Latin America and the US, and, you know, it becomes such an unmanageable scale. My recommendation is pick 3 markets, start doing research in 3 markets, start engaging with 3 markets, and what you'll find is that over time, one of those 3 will start accelerating in terms of traction. One of them is likely going to slow down a little bit, and then there'll be something in the middle. But, you know, give yourself a little bit more focus to because, you know, there's limited resources and time, right?
Yeah.
So you can't do everything.
And maybe just
Sorry,
on that.
Elizabeth.
Okay.
No, please go
Just
ahead.
on that, I just wanted to say maybe those 3 that you've just mentioned might not be the most popular destinations that people talk about. So really be open and open-minded about what your specific expansion plan might look like. It doesn't need to be US first after UK.
Yeah. We can go maybe Liechtenstein, Luxembourg,
Exactly.
and
Via
San Marino.
Monaco. Exactly.
Cover the
You've missed
3,
Andorra.
the big 3 in Europe. Yeah.
Yes.
Okay. You had a thought?
Yeah, well, the market research, of course, has to be done. And honestly, I always recommend, if somebody coming up, you know, should have set something up in Vienna, Austria, I always tell people, you know, compare other cities and countries as well. Shop around, see what they can offer, and then come back to the best that suits your product, your service you're going to sell. And of course, I hope it would be, of course, the city I'm representing here. But else, I want companies to be happy and flourishing and doing business. But really shop around, have a look.
Fantastic. I think that's a great note to end on. Thank you very much, everybody, for your contribution on stage and your contribution in the audience. And I hope you got a couple of interesting ideas and a bit of inspiration that you can apply to your own businesses moving forward. So thank you very much.